Good morning, everybody. It's Wednesday, January 15th, 5:25 a.m. Central Time. Grain markets are mixed this morning. Things have settled down just a little bit following that sharp two-day rally in the row crop markets on Friday and Monday. March corn futures up 2 1/4 at 476 3/4. March soybeans up 2 3/4 at 1050 1/4. March Chicago wheat is down 2 at 544 1/4. March Kansas City wheat down 4 3/4 at 556. March spring wheat down 1.5 at 588. We've got some tariff news to start off.
So, President-elect Donald Trump's economic team is discussing a gradual increase in tariffs. The plan would slowly raise tariffs each month with the goal of increasing negotiating power and preventing a surge in inflation. One option would be to hike tariffs by roughly 2 to 5% each month. The plan is still being deliberated and has yet to be presented to Trump. The announcement of the proposal on Tuesday caused the dollar to fall against nearly every major currency, along with US Treasury yields. The Bloomberg Dollar Spot Index fell by as much as 0.4%, and the 10-year Treasury yield declined by 3 basis points to 4.75%.
The last time there was a report along these lines, I think was it the CNN report where they said they were going to go easier with the tariffs? Trump came out and denied it like right away, and I don't believe that he's come out to deny this just yet. So, in the grain markets and soybeans in particular, we've been very worried about what sort of impact that the tariffs could possibly have. Trump, the dollar. So the dollar was one thing yesterday, and I pulled this chart because I thought it was interesting. We're back to kind of a normal negative correlation, the dollar and the grain markets. There was a period through a lot of 2021 and into 2022 where there was actually a positive correlation between the US dollar and the grain markets. It was because we had inflation, we had Russia, Ukraine, and the Fed was beginning to hike rates during that time. And now you're back to a more normal negative correlation. When Trump took office in 2016, the dollar began to trend lower and trended lower for a while. I don't know if that's going to be the case this time around or not. Trump was talking yesterday about something called the External Revenue Service for tariffs. I don't know if this is just tough talk revolving around tariffs. He wants to just keep emphasizing the fact that he's the tariff man and you should be scared of him. One thing that we should make clear here, and even the headline kind of discusses this in the wrong way. He says, or the headline from Bloomberg says, Trump has framed tariffs as a way to offset costs of his agenda. Economists say tariffs threaten to raise consumer prices. There was another headline that I didn't like. It wasn't that one. I'm sorry. But in any case, in the United States, when there's a tariff, tariffs on imported goods are paid by the importer of record. So if you are a company or business in the United States and you're importing computer chips or electronics or whatever it is from China, that company is the one who pays the tariff to the U.S. government. So when Trump says like China's going to pay for the tariffs, what he really means is like China's going to pay for the tariffs. But, they're not actually writing a check for the tariffs. It's actually U.S. companies and then the U.S. consumer that will pay for the tariffs. And that's why they're seen as being inflationary. So I still think this is a tremendous wild card. It's a tremendous wild card. We still don't know what's going to happen a week from now or 10 days from now. I'll tell you this, the soybean markets acted very well. And for what reason, I don't know. Large money managers are net long the soybean market in real time, which is very interesting considering the global supply and demand situation, the South American weather, all of that.
A bit more on tariffs. Analysts have differing opinions regarding potential Chinese tariffs on the U.S. on U.S. soybeans. The South China Morning Post discussed this issue in an article this week. Analysts believe that soybean trade between China and the U.S. is essential for both nations. The U.S. agricultural industry has largely backed President-elect Donald Trump, and he likely won't want to jeopardize their interests. China's demand for soybeans remains strong, although the country is working to expand domestic production and become less reliant on foreign sources. Analysts anticipate there will be more negotiations between the U.S. and China. They have also floated the idea of a phase 2 trade deal, which would benefit both countries.
I'll preface this by saying that the South China Morning Post is not, we're not posting this because it's like a serious news organization. It has some flaws. Some people think it's like a mouthpiece of the Chinese government, even though it's not, there's not a direct tie. But you could probably say the same thing about Bloomberg and Reuters and everybody else. And people think that they're biased. And that's part of why we do what we do. We add context and color to this, right? This was actually a really good article. If you guys are looking for a a I thought well-written summary and just overview of what happened during the last trade war and kind of what's happening right now. This was actually a pretty decent article. I thought that a couple of things were interesting. The one is this. In January of 2022, President Biden declined to lift tariffs on Chinese imports because Beijing had not abided by the terms of the Phase 1 deal, and the trade war persisted under Biden's presidency. That's one thing that a lot of the headlines seem to omit. And then there was an analyst here, as Mackenzie mentioned. I wonder if there's going to be a Phase 2 trade agreement. If so, I believe it could boost soybean trade and create a win-win situation for both countries. So maybe it's not all negative. I seek to answer this question today. Can China afford to avoid U.S. soybeans if we get into a trade war? Is that something that they're interested in? I think the answer is yes, if USDA's data regarding Chinese soybean stocks is correct. USDA projects that Chinese soybean stocks, ending stocks, will be record high at the end of the marketing year at 46 million metric tons. And they're using a lot more, so this is not the best statistic. This is the best statistic. China soybean ending stocks to use ratio as a percentage is going to be north of 36% if USDA is close to reality. I understand that people have a lot of problems with USDA's China numbers in particular. Some people think that they're not real. But if this is real, it would indicate this: for every 100 bushels of soybeans that China uses this year, they're going to have 36 left over at the end of the marketing year. To put this in perspective relative to the United States, I think our soybean stocks to use ratio in the United States is going to be like 8%, and China's like 36%. Highest on record. So yeah, China could probably avoid U.S. soybeans for a little while if they had to, especially when you consider how big the South American crops are probably going to be.
So if you guys have yet to check out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
I did a grain marketing review yesterday, corn and soybeans, old crop, new crop. In those grain marketing reviews, I run through every cash sale that I've advised. I kind of discussed the game plan moving forward. I also issued a warning that I guarantee will at least save one person from going bankrupt at some point in the next 20 years, and maybe more than that. When it comes to grain marketing, there's something that's going on right now that some farmers are doing that they shouldn't be doing with regard to marketing, and I discussed it. I can't give away everything for free, guys. Go to standardgrain.com, sign up this morning. It's $50 per month subscription. You can cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. Mackenzie's going to be doing charts with Brian Split today, which should be super interesting given what we've seen in the markets here the last few days.
CONAB is forecasting a record Brazilian soybean crop. The Brazilian Crop Agency projects this season's crop to reach 166.3 million metric tons, a slight increase from the previous estimate and up 12.6% compared to last season. The increase was attributed to favorable growing conditions and an expected 2.7% rise in soybean acres. Soybean exports were left unchanged at 105 million metric tons. The export projection would be a 6.5% increase compared to last season. The agency slightly lowered its outlook for total corn production to 119.6 million metric tons. A reduction in first corn crop acres and drier conditions in southern Brazil were cited as factors contributing to the slight decrease.
There is, of course, a difference between USDA's estimate and CONAB's estimate. There always is a difference. It's fairly wide at 2 or 3 million metric tons, but I'm not going to read too much into it. They're both indicating large crops. Here's a great chart. Not a great chart. I put it together. I thought it was an interesting chart. I'm not going to say it's great. You can decide if it's great. Combined Brazil and Argentina soybean production versus the United States. Combined Brazil and Argentina soybean production has more than doubled since 2008 and has increased 220% since the year 2000. So they continue to expand and at a breakneck pace, and that's something that probably continues. I don't have any reason at this point to believe that this combined estimate of 221 million metric tons, I don't have any reason to believe that it's going to shift a lot from that sort of area. Brazil looks to be in fairly normalish shape with regard to weather forecasts. I know there were reports of some potential harvest delays in the north due to heavy rains, but you look at Mato Grosso in the further northern areas, and that's where the soybean harvest is going to start. They're actually going to be a little bit drier than normal over the next 14 days. And then you've got rains returning to the southern part of Brazil, which has been kind of the problem area. Looking at Argentina, still drier than normal in some of these north to northeast pockets, but it's a little bit improved. We've got rain coming back into those problem areas. Argentina and southern Brazil this weekend, Friday, Saturday is what the forecast is indicating. And then you'll see some additional coverage during the 10 to 16 day period.
The U.S. Federal Trade Commission is considering filing a lawsuit against John Deere for its repair practices. The agency claims that Deere has violated competition laws by denying farmers and independent repair shops access to diagnostic tools and critical information. The FTC commissioners have yet to vote on whether to file the lawsuit, but the agency is prepared to do so this week. Those in support of the lawsuit say Deere designs its equipment so that repairs and diagnostics need special software that can only be accessed at its dealerships. According to the Bureau of Labor Statistics, the average cost for maintenance and repair of agricultural equipment surged 48% in the last 4 years. The FTC has been investigating Deere over its repair practices since 2021.
I don't know a damn thing about this, but I figured we'd throw it in because I wanted to see what you guys thought. If you have comments on this, or if you've had issues with Deere or anybody else when it comes to repair practices, parts, dealing with dealerships and dealerships only, that sort of thing, drop them in the YouTube video here this morning.
Wholesale inflation was tamer than expected last month. The December PPI rose by 3.3% compared to last year, up from 3% in November and the highest reading in almost 2 years. However, the annual reading was still below the 3.5% increase economists had expected. On a monthly basis, wholesale prices increased by 0.2%, below the 0.4% increase economists had anticipated. The December Consumer Price Index, which will be released here this morning, is expected to show little progress in reducing the rate of inflation. The Federal Reserve is almost certain to hold rates steady at its upcoming meeting here in a few weeks.
Reinflation event possible. So PPI is at 3.3%, and wholesale inflation is often a precursor to what will happen on the consumer side. So I don't know. You look at the way some of these commodities are acting. Is there a trade out there? I put the word trade in quotes. Is there a trade out there? Some money managers who are front running a potential reinflation event with their commodity position. You look at, I mentioned soybeans and large money managers earlier. Why are the funds net long soybeans in real time, given everything that we know about the fundamentals? What are they seeing that I'm not seeing? Is it the potential for a reinflation event? Is there some optimism regarding biofuels and forthcoming policy? Is it simply just a tighter U.S. supply and demand situation? I don't know, but I'd keep an eye on these inflation readings.
USDA reported a flash sale of soybeans on Tuesday. U.S. exporters sold 7 million bushels of beans to China for delivery during the current marketing year. An identical flash sale was reported on Monday.
Reuters data this morning indicates that Brazilian soybeans for February delivery are $1 cheaper out of Brazil than the U.S. Gulf. Brazil's advantage grows even further when you get into March. So, yeah, they've got doing some last minute business here. But gosh, if this Brazil crop is as good as advertised, I wouldn't be surprised if this just grinded to a halt here, or even if you saw some cancellations, because Brazil's crop's going to be a monster the way that it looks. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 5 cents to 87 cents lower. Feeders, on the other hand, were 10 cents to 225 higher. Box beef was also mixed. Choice was 37 cents lower at 332.98. Select was $1.14 higher at 318.71.
Outside markets fairly quiet this morning. U.S. dollars off just a little bit. S&P's up 15. The Dow's up 120. Gold rather is up $22, and crude oil is up 15 cents at 76.53 in the March WTI. Have a great day, guys. We'll be back on Thursday.